All right, guys, it's Angelo Christian with another great edition of Real Estate Insider, and today we're going to be breaking down, comparing FHA versus conventional loans. You know, people call us, thousands of times per month trying to find out, Angelo, what's the better loan for me? Should I do FHA or should I do conventional? And I'm going to tell you, it really just depends. You have to look at both FHA and conventional loans to see which loan program is going to be better for you. So today, that's what we're going to be focusing on, explaining the guidelines and qualifications and benefits of both FHA and conventional loans so you can determine which loan program is better for you. And also, you can get pre-approved for both loan programs at the same time with us. Whenever we give you a pre-approval, we can actually pre-approve you for both loan programs, and then you can decide which loan program that you want to do. So first off, I want to talk about FHA loans, okay? FHA loans have grown massively in the last decade. They've almost taken up 30% of the mortgage market share in the United States. That means that of all the 30% of the mortgages that are done right now in the United States are FHA loans. So FHA loans stands for the Federal Housing Administration. It's a government-backed mortgage guaranteed by the Department of FHA. And the purpose of it is to ensure the lender, whenever the lender makes the loan, in the event of a default or a foreclosure, the FHA will actually pay off the mortgage company if the borrower goes into foreclosure. So they're protected. So FHA loans is a great loan program for first-time buyers, second buyers, people that don't have very, very strong credit, or even people that have fair or even decent credit. It's available nationwide in all 50 states and all the sister countries as well that partner with America. So you can buy a brand new home. You can build a house with the FHA. You can refinance and take out cash with the FHA if you own a property. And because it's a government guaranteed loan, there is a fee that you have to pay to the government. It's 1.75% of the purchase price or the loan amount that you finance. So whatever the loan amount is that you end up financing, that funding fee gets financed into your loan as well. So if you have a $100,000 home, you'd actually finance $101,750 because you have to finance in the mortgage insurance for the FHA. It also has a monthly mortgage insurance of 0.85%. So whatever you end up financing on the size of your loan, you pay mortgage insurance monthly for the life of the loan, 0.85%. The only way you can actually get rid of the mortgage insurance is actually if you refinance the mortgage into a conventional or another type of product. If you're with an FHA loan, the mortgage insurance stays on there for the life of the loan. Now, if you do a 15-year term, the mortgage insurance is actually cheaper, but with a 30-year term, it's 0.85%. All right, and there are loan limits with respect to the county that you're looking to buy in. Typically, the loan limits are anywhere from $300,000 to $700,000, depending on what part of the country that you live in, whether it's New York or California or Orlando or Houston. It's going to be anywhere from $300,000 to $700,000, and if that's for a 1-unit property. For a 2-unit, it's even higher. For a 3 units higher, and for a 4 units higher. With the FHA, you can actually go up to a 4-unit property and still get residential term financing with only 3.5% down. That's it. So with an FHA loan, you only need 3.5% down. You don't need 20% down like a lot of bank loans, okay? So whatever the purchase price is, you just have to put 3.5% down. The closing costs can either be paid by the seller, they can be financed into the loan, or you can pay the closing costs out of pocket. Typically, it's a combination of those. You can go up to 6% seller concessions to cover the closing because closing costs is different than down payment. All right, now these loans are fixed rate mortgages. They're also adjustable rate mortgages that are available too. Most of the FHA loans that we do are fixed rate mortgages, but there's also adjustable as well. With the FHA, they have no credit score requirement, guys. So you can actually we go down to a 500 credit score with the FHA program. And that's one of the biggest differences between FHA and conventional, whereas conventional, they typically want to see a 620 or higher credit score. With FHA, we can actually go down to a 500 credit. And they're very lenient with if you had issues with your credit and you had extenuating circumstances, whether it's medical, job loss, or illness, the FHA, because it's government-backed and guaranteed, they work with you on your credit, even if you don't have the best of credit, all right? So it's a really, really cool program. Also, co-signers are allowed with FHA, all right? If you want to co-sign, if you're buying a home from family, we can roll the down payment and your closing costs into your loan, so you can do 0 down if you're buying a property from family. So that's a really, really cool thing with FHA. You can also do manufactured homes, townhomes, condos, single family, the list goes on and on and on, modular homes. So it's a very flexible product, and it helps thousands of people every single year. I've helped thousands of people with an FHA loan. And like I said, you can also use it for refinancing and cash out as well. I love the FHA program. I'm a big advocate of it. There is no prepayment penalty on the loan. There's no balloon, so you can pay off the loan anytime you want. The loan is assumable with conditions. If you want to assume, pass it on to your heirs, they can also assume that property with qualification. So it's a really, really cool program. Now, the one thing that there has been some, kind of a misbelief with realtors. A lot of realtors and sellers, they kind of don't like FHA because they think that they're very strict on the property and the appraisal. They are usually a little bit more qualifications with the appraisal, and the realtors and the sellers are a little bit more of a stickler on that. So you see a lot of properties that are for sale that just want cash or conventional only. They don't want to take FHA funding. With us, the way we work, we'll allow you to purchase a property that needs minor repairs with the FHA. We have something called an escrow repair program where they can actually finance in up to $5,000 for repairs or renovations into the property. And the FHA also has a renovation loan program that you can do up to $150,000 in repairs as well. So it just depends on your lender. With us, we do the renovation 203K with the FHA, and we also do the escrow repair. So not to worry if you want to buy a foreclosure or you want to buy a house that needs fixing up. We do the 203K, and you can get cash back for repairs. So that's how FHA works. Now, with conventional is a little bit different. Like I said, you usually have to have a 620 or higher credit score. The loan amounts are higher. With conventional, you can typically go anywhere from $424,000 up to $1 million, depending on where you're at in the country. And the more units, like the second unit, the third unit, fourth unit, the higher the loan amount you can go. Okay. The biggest difference with conventional is that the mortgage insurance comes off on the mortgage when you hit 20% equity. So you don't have to keep paying that monthly mortgage insurance. Usually when you hit that 20% equity mark, you've been paying on the payment for at least a year to a few years, you can request to have the mortgage insurance removed, and then therefore your payment would be recalibrated, and you'd have a lower monthly mortgage payment once that mortgage insurance comes off the payment. Also, with FHA loans, you have to escrow your taxes and insurance. It's mandatory. With conventional loans, if you put 20% down, you do not have to escrow your taxes and insurance. With conventional loans, you could do 3% down, 5% down, 10% down, and 20% down options. When you put 20% down, you don't have to escrow your property taxes and insurance. Some people, they don't like to pay their property tax and insurance in their monthly house payment. I don't like to do that. All right. When I had a mortgage, I wanted to manage my own property taxes and insurance. I don't want to have my lender deal with it. So you may be like that, and you may want to do a conventional loan. And the other thing with conventional loans, the biggest difference between conventional and FHA, they are more strict on the debt to income ratio. With FHA loans, you can go up to a 56% debt ratio. With conventional, it's typically maxed at 43%. Sometimes if you have excellent credit, you can do 50%, so it just depends, but they are more strict. Also, with an FHA loan, you can buy a home after bankruptcy, Chapter 7, just after 2 years. But with a conventional loan, you have to be out of bankruptcy for 4 years. If you had a foreclosure, you can buy a home with FHA after 3 years from a foreclosure, but you have to wait 7 years, guys, with a conventional loan if you had a foreclosure. So it's a big difference. It's a bank loan. It's not insured or backed by the government, so there's more risk on the hook to the lender. If you go into foreclosure, it normally costs the bank about $40,000 to foreclose on somebody. So it is going to be more strict on the qualifications. Co-signers are still allowed. Manufactured homes, not so much. Single family and condos are fine. Now, another benefit about conventional, they're much more lenient on the condos. So if you're trying to buy a condo, conventional is usually a more preferred way to go. FHA is tough with condos. They have to be FHA approved, and there's an FHA approved condo website. You actually have to check to make sure that condo is actually approved with FHA. So that's another big difference. You're trying to buy a condo, Conventional is normally a better way to go. There are some FHA approved condos, but there's not too many of them. But those are the biggest difference between FHA and conventional. They both have their place in the market. Obviously, conventional, it has larger market share. It's a really, really good program. Again, it has a little bit more qualifications. And if you qualify for conventional, it's definitely preferred over FHA. There is no funding fee. You can remove the mortgage insurance. You have more options. You don't have to escrow. But if you don't qualify for conventional, whether it's your debt ratio or your credit, FHA is just as good, if not better, and you can always refinance into conventional later in the event that your credit improves, your debt ratio, or you want to remove the mortgage insurance off your mortgage. So those are the biggest differences between FHA and conventional loans. We specialize, we do both of them, and like I said, we can pre-approve you for both of them. You know, there's also a renovation loan program with the conventional loan too. So if you're looking to buy a house that needs repairs, we can also give you a renovation loan with conventional. It just depends. Normally, the way it works is whenever we do an application with you, we do an assessment to see what's going to be the best loan program for you, and then we can take a look at, is it better to go conventional, is it better to go FHA, and then from there, we can make a decision on what's the best route. So, guys, if you're out there and you're looking to get pre-approved, we are a nationwide commercial and residential lender. We can help you if you're trying to buy your next apartment deal, if you're trying to refinance your restaurant, your business, you're trying to buy your new home and you're a veteran, you're a first-time buyer, you want to use FHA, you want to do conventional, you want to cash out on your property and do a home equity loan or a reverse mortgage. I'm a certified reverse mortgage specialist, so if you're looking to buy your new home with a reverse mortgage or refinance with a reverse mortgage, I'd love to help you. I've been doing this for 15 years and lent over $1 billion in lending, helped over 13,000 families all over the country to secure financing. I'd love to help you. And this is what we do with our network, guys. We educate you, we empower you, we teach you about finance, about real estate, so you can make the best decisions with your life, about credit, about real estate, so you can have a better life. You know, now you learned what's the difference between FHA and conventional. Now you can see which way you want to go. See, you need that knowledge because knowledge is power. Now you're empowered to know, hey, I'm going to go conventional. Hey, I'm going to go FHA. Hey, I know how to boost up my credit score. That's what we do at our network, guys. We want to teach you and empower you. That's our mission here, to put you in the best financial position and educate you on finance and real estate. So, like I said, I'm really happy that you guys are following us on YouTube. Our goal is to grow our following to 1 million followers in the next 5 years. So please share this with your friends, your family. Leave a chat down below if you have any questions or comments. We work extremely hard here with our team to deliver great content every single week to empower you guys. And like I said, just, follow us on our Facebook, our YouTube, and our Instagram. We love you guys so much. Thank you for checking out Angelo Christian. We'll see y'all again next week. Take care and peace out. Bye-bye.